I was in Business Over Breakfast the other day, and somebody talked about an 18% loan, an 18% loan. So I said, well, let me take a look at that and let me see what I can do with it. I'm going to bring that up and let me see what I can do with an 18% loan. I'm going to pull that up and we're going to take a look at that. So let me share my screen. There's an entrepreneur, all right, real estate investor that got an 18% loan. We're going to share that screen. All right. So we're going to put that up and take a quick look at this. This is a multifamily home. It's $200,000 that is borrowed at 18%. All right. And that's what we're going to put up on the screen right now. All right. So $200,000 at 18%. And you say 18%. Wow. What does that mean? Here's the payment on that. It's $3,014.18 a month. Okay. And with that, he's making $6,000 a month in rents. So is the property cash flowing? It's most certainly is. All right. So we got 18% here. Somebody said that is just way too much interest on that. But we're going to break that down for you. And this is going to kind of lead into why I love interest only loans. But let me go ahead and put an amortization schedule up too, so you can see what we're talking about. 18%. All right. 30 years. And I'm going to pull this over so that you can see this first. Okay. This is how we're going to break this down. 18%. All right. And then you say, what is going on here? $3,014.17 a month. But remember, this particular person is making $6,000 a month in rents coming in. So that's a pretty good income, wouldn't you say? 6,000 and he's paying 3,000. But I want you to take a look at what most people do not focus on. That is the interest cost per month. And I want you to see what's going on with this loan. Can you see the principal payments here? If you cannot, I'll tell you what's going on. On the very first payment, $14.17 goes to principal, $3,000 of that payment goes to interest. But this property is still cash flowing because remember, this guy is making $6,000 a month, but he's paying out $3,000. Okay, so that's pretty good. That's still pretty good cash flow. So now here's what's happening. $14.17 goes to principal on the very first payment, while $3,000 goes to interest. I want to ask you, do any of you want to have a loan like this where only less than $20 out of over $3,000 payment, less than $20 goes to principal, but the rest of that money goes to interest? Wow. All right. Wow, wow, wow. Does anybody want to do that? Put your answer in the chat if you want to pay that kind of interest, $3,000 while only $14 goes to principal, pays down the loan. Let me show you what's happening here with this small payment. If you prepay, let's make the very first payment. All right. We've made the very first payment of $14.17 going to principal, $3,000 going to interest. Now, watch this. If we got $14.38 the next month going to principal, do you know if we make a payment in the first month and we give the bank $14.38, the principal payment on line 2, if we give that to the bank early, do you realize that saves us $2,999.79 in interest we don't have to pay? A small amount of money like this, $14.38 prepaid, keeps us from paying nearly $3,000 in interest. Okay. Now I'm setting this up so that you can know why I love interest only loans, where you're only paying interest and no money goes to principal. But when you understand how you can take advantage of these loans, that is what is going to be phenomenal. So now here again, we have an 18% mortgage This is a real estate investor. They're making $6,000 a month. Their payment is $3,000 a month, $3,014.17. Now watch this. If we can get rid of one of these interest payments for just prepaying $14.38, what would happen if we make the payment on line 1 and then we paid the principal payment on line 2 and 3, about $30? We pay an extra $30 on this loan. Look what happens to how much interest we save. Okay, that's nearly $6,000 in interest saved for an extra $30. Do you find that amazing? I find that absolutely amazing when you can see what happens with loans that have high interest rates. Okay, but what we need to focus on is what we can do to eliminate high interest cost. Now, I need you to take a look at this. All right. I need you to take a look at this. All of the principal paid for 1 year, cumulative principal. Are you seeing that? Cumulative principal is only $184.79. $184.79. That is all the principal payments added up. Okay. All the principal payments added up between $14 a month and $16 a month. Added up for 1 year comes to $184.79. Here's my question, and I need you to answer this. I know because we borrowed this money, we have to pay that $184.79 eventually. But here's my question. Do we have to pay it in 12 monthly installments? Do we have to pay the $184 in 12 monthly installments? I need to get those answers. Somebody put that answer in the chat. All right. Here's what we're talking about. Let's do this. Let's answer that question. Do I have to pay $184.79? Stephanie Rice says no. She says no. If I had it, you could, if you wanted to, you could pay all of that at one time. You can make your regular mortgage payment and then give the bank an extra $184.79 on top of that. Guess what happens when you do that? You knock off an entire year of payments. An entire year of payments is gone. And how much interest do we save? $32,987.77. Can you imagine just an extra $184 on this loan saves nearly $33,000 in interest you don't have to pay if you happen to have an 18% mortgage. You see, when you are in control of the principal payment, you can control this loan. When you are in control of the principal payment, you control the loan. Somebody put that in the chat. Control the principal payment. Put that in the chat right now. That's what you want to be able to do. Once you control the principal payment, you control this loan. You control any loan. So what you don't want is the bank to give you a particular interest rate or setup where they control how much principal you pay. You want to control how much principal you pay and when. When the bank controls all of that, you pay a lot more money. All right. So listen, you're in the P.I.L.L Method Club, paying off your mortgages and other loans in about 7 years by understanding why we don't want to pay all of this interest, understanding how loans actually work and how you can take advantage of these loans before the loans take advantage of you. We had a gentleman that it paid off his mortgage in 4 years using the P.I.L.L method. And some of you have heard of him. His name is Dr. Eric Thomas, E.T., the hip hop preacher. I need you to listen in to what he has to say about the P.I.L.L method. Let's play it. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L method. I invite you to watch and listen.
Listen to me, y'all. But one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today.